Welcome everyone to a weekly session that Travis and I have. We haven't been with you guys for a while. And Happy New Year. We all celebrate a new year. It's a new year and look at what the market's doing for us. So I'm not going to go into that, but we'll cover it.
Yes, welcome everybody.
You can edit all that out.
No, I'm gonna keep that actually. These are Success Academy recaps to kind of give Success Academy members a kind of weekly motivation, as well as the public let you know what we are doing inside of our family, our side of our options family. Everything we're sharing is for educational, informational purposes because we're going to show you trades, what we're up to, what we're looking at in the market. So this is our first meeting for the year. So what I'm going to do is kind of give a brief overview of what I'm up to. Then I'll let Peter in with his thoughts. Oh, Peter, you know what I thought about? If you don't mind, you can also talk about your Macy's
I was going.
Yeah, and what you learned. Okay, great. All right, so what I am doing is we are on year 3. I'm doing a model account showing people in real time how my wife and I achieve financial freedom, just a reenaction of that. We call it the 10-minute retirement trader case study. So this is year 3. This year, I'm also doing something different. I realized I was neglecting the needs of my members who have larger accounts because this is showing people how to grow a small account, 10 grand, 100 grand, 5 years or less. We're on year 3, so a 10 grand account. I haven't even added money to the account this year, but it's close to 30 grand. So just in 2 short years, the account has almost tripled in value, right? Showing people exactly how we did it. But all the while, I can promise you in those 2 years, somebody got distracted by some other bright, shiny object while we nearly tripled our account. So I'm saying that please focus on what I'm teaching in these case studies because it's truly the path to financial freedom. And then I'm showing you also in year 3 how to take a large account, and that's how we use monthly income, showing how you take a monthly draw from it, how you manage your account so you don't run out of money. All right, so that's what I'm doing. I changed my spreadsheet this year. We'll cover this on our first Success Academy live call, but I'll briefly scan through this real quick. I'm going to profile probably 6 strategies here. Same strategies we profiled before, but I'm just calling them something different now. Buffett strategy, profit accelerator, the cash flow strategy, rental income, showing how people how to earn rental income from stocks. You can do that. Not a lot of people know that. Why? Because it probably is some boring name called covered calls. If you heard somebody talk about covered calls, you're like, what's that? You're probably not going to look it up on the internet. It just sounds boring. But if you hear somebody say, hey, I rented out my stock shares this month, I made $2 grand, you're like, I want to learn how to do that, right? Nobody wants to learn covered calls, but they do want to learn how to earn rental income. We're going to talk about the 10X strategy. That's the strategy I used to turn 10 grand to 70 grand when I first started. And this year, I'm going to really heavily focus on portfolio insurance, showing people how to protect their accounts. Now, let me go ahead and pull up my stock chart and then turn the floor over to Peter because I don't have much to share with trades. I'm changing up how I invest. I'm trying to make maybe trades once a month. I'm trying to automate my ambitions so I can actively pursue being a better dad and husband and things like that. So I'm going to place my trades once a month, set it and forget it, low maintenance trades. So the rest of the month I can spend time on my family, I don't know if infinitely is the word I'm looking for, which are more valuable than the money I make from the stock market. Now, with that being said, let me go ahead and turn the floor over to you, Peter.
Okay.
And let me
All right, so hopefully everyone liked my intro statement. I think that's the first time I've done it, right?
Yeah, it is. Yeah. So it shows you the new presenter.
Okay. All right. So welcome again, everyone. So I know I'm kind of weird a little bit, but anyway. All right. So the first thing I want to cover, you can see I don't have a whole lot of trades. Now I do want to point out something because one of the things that Travis has always been transparent when I first started with him. He was always transparent about everything he's doing. And I kind of just was taught the same way by him to be transparent. But I have to explain certain things, and it's important that you understand where it is. So if you look at these are all my accounts. It looks like I'm losing $7,100. I'm actually not losing unless, if everything went to zero, I would lose $7,100, right? So, but let me just kind of explain real quick, and then I'll do my Macy's trade at the end, because that actually is one of the biggest lessons learned, and I really screwed that one up. So anyway, SPY, I have a 220 cash secured put. I sold this a long time ago. Basically, this still has 371 days. And when the market really started tanking over the last month or two, I was thinking, hey, I'm going to get to buy this. These are set it and forget it trades. I don't worry about this because if I buy it at 220, I mean, SPY today is at 258. So if I bought it at 220, I bought it at a significant discount. So it just makes it look like I'm losing money here. I'm not actually. I just have that much money that I would have to spend on the cash secured put. AT&T, same thing. So you can see what this is what I purchased AT&T at, 36 for this account and 32 over this. And yeah, it's going to show a paper loss because AT&T is at $30.77. But my overall strategy with that is it's a dividend stock, a high-paying dividend stock. So I'm not too worried about the price of it. If you look below my AT&T, this is what Travis is talking about. I'm renting out my shares. So I own 1,500 shares and I'm just renting them out. I rented them out over several months, right? So you can see the days here, 35, 63, and 97. These two here, actually, if I got called out and I had to sell my shares, I'd actually make more money because I'm selling them at $1 more than what I bought them for. So that's pretty good. And that represents 500 shares each on those. Now let's get to my last one, Macy's. Macy's was a huge blunder. And I want to go to the chart of Macy's here. And I told Travis doesn't trade stocks, and this is why. So this is a short-term or a small trading account. It started with a $5,000 balance, but I still do contribute to it. I contribute $250 to it every month. Like clockwork, it's a guaranteed I have to contribute to it because I understand that contributions are very much a part of returns. So if you look right here, let's see, this was August 14th. I sold my cash secured put I was exercised on August 4th, I believe is when I was exercised. So right here. So I wasn't too worried about it because I sold a $39 cash secured put and I got exercised on the 4th because it was trading just below that, right? What was it trading at? It closed at 38.78. So not bad, right? I bought it. I had to buy it at 39. It was trading at 38.78. But look at what Macy's has done. It never came back. So I was never able to really get out of the stock. I guess I could have here for a small loss, but I never had plans to because I never anticipated it doing good. But it did 2 days ago. It dropped to $25. It's like, holy crap, I'm losing a lot of money on paper. The big lesson here is I should have bought protection when I sold the cash secured put. That's my lesson that I've learned. From now on, if I sell a cash secured put at the money cash secured put on a stock, I'm buying protection at the money for that stock. And in the short term, when I was looking at it, I'm thinking, man, that put option is going to cost a lot of money. And I was always thinking things are just always going to be rosy, right? And now it's kind of affecting me in the long term. So right now, if you look, my profit and loss is at a $1,300 loss. So what this is saying is if I had to sell out my shares, I'd be selling at $1,300 less than what I paid for them. Now, there is a little bit of light at the end of the tunnel because if you look below here, see this covered call? This obviously is going to expire worthless, and I'm going to keep all the credit I got. And the good news is if we go to my spreadsheet, you can see that I'm actually really up with this account because all the money I've made on Macy's, you can see like trades here. These are all different covered calls that I made on Macy's. So I'm actually about $600 at a loss with Macy's if I were to sell it today. So what's my long-term plan? As I was saying to Travis, well, I got to redesign that because I'm just going to have to take this month by month. And I don't expect Macy's. I do follow it fundamentally. I don't expect Macy's is going out of business. I don't know why it dropped, 17% in one day. But that's what stocks do. The good news with Macy's, I guess, we don't use hope, but if you look at Macy's, it's pretty volatile. It does go through, we were talking about this. Look at this from here to here. I mean, in less than a month, it jumped up just as much as it lost the other day. So that's kind of what I'm looking at that. I'm looking at it thinking, Macy's is most likely. I don't know if it's going to recover, but I am staying positive that it will recover. I don't want to use the hope word because we don't like to say the hope word. But for I'm going to take it month by month. That's basically, and if worse comes to worse, I'm going to bite the bullet and take my loss, and I'll never make that mistake again. So hopefully you guys will learn from my wisdom. If you're like me, you're not going to, because Travis told me not to do it this way. And I learned from experience not to do it this way. And his wisdom kept telling me, don't do that, Peter. So I'm a moron. I did it wrong.
Hey, so, there's two ways to learn, wisdom or experience. Wisdom takes weeks to months. Learning by experience takes years.
And it's more painful learning by experience.
Yes, painful and costly. Hey, some people learn better that way. And you have already admitted that you are one of those people. So our job, everyone, is to keep Peter's lessons inexpensive. So when he does pay the price, it's not a huge price. Something else you were saying that it brought to my mind. I put this in insurance training. You either pay the money now or pay a higher price later. Everybody, even me, I showed you my Excel a few minutes ago. I think I had 17 grand out in insurance. Trust me, when I went to buy those insurance contracts, 7 grand. When I went to buy those insurance contracts, I was like, oh gosh, I do not want to pay this price. But I put it in the training. I looked at your insurance. It probably would have cost $500 at the time if you had bought it then. So you pay $500 now or you pay $2,000 later. That's literally the choice it comes down to, because if you look at your loss now, it's probably going to be close to that. So, or let's look at it this way. You pay X now or 5X later. Don't look at the dollars. That's how much your insurance will cost if you try to buy it later. But then it's too expensive. You're like, it's pointless to buy it now. So I might have just sucked up the loss. You have to wait. You can't do anything. You just have to wait till the stock recovers, if it recovers. And that's a big if, because we never know. We can't predict the future. So, well, hey, that's a good. I should put this in our insurance lesson. We should add this to our insurance lesson. I've been through this, man. I've learned the hard way. So, but
I'm making you the presenter again.
That's fine. I don't have any.
Okay.
Yeah, I don't have anything else. We are actually done. This is our short intro for the year. Just give everybody a touch base with everybody. As soon as I get rocking and rolling, I'm still trying to get my spreadsheets up for the year. So as soon as we get in the rhythm of placing trades, we'll have more trades to review on these weekly recaps. And so if y'all have any questions, you know where to find us. Y'all take care, and see you in the next live call. All right, bye-bye.
Bye.